But talking about the numbers, clearly great set of numbers. In fact, the entire banking system hasn't really disappointed this time, even though, for some of the public sector banks, we have seen asset quality really deteriorating. When it comes to the private sector lot, yet again, it is turning out to be a decent quarter for that one. Mayuresh Joshi is there with us right now, fund manager at Angel Broking. Thank you very much, Mayuresh, for being with us here on NDTV Profit. Good to have you on the show. Your first reaction to the numbers of ICICI Bank, which have just come out.
I think well-rounded numbers and strong show on all fronts. So the profitability has gone up. The NII growth has been decent. The asset quality has got curtailed. And though the management was mentioning that the restructuring pipeline would be pretty decent going forward into 16 earnings as well, I think the numbers have come out reasonably better.
Mayuresh, the net interest margin has improved quite sharply, about 3.54% in the first quarter versus 3.4% in the first quarter a year ago. What was your expectation? Do you think it's a great number to go ahead with?
Oh, yes, I think the margin was expected to stay in this range. So again, I think the expectations going forward are that the margins are expected to sustain around this range of 3.5 to 3.6, and that is what the management has guided. And again, I think if you factor in higher credit costs, around 85 to 90 basis, which you have done, I think even if you take that into account, the restructured pipeline into account, I think the numbers have been good on all counts for ICICI Bank.
Mayuresh, what's your view as far as the asset quality is concerned? There has been a marginal decline in terms of percentage. The net non-performing assets stand at 6,402 crore rupees, non-performing asset ratio at 1.40%. So what's your assessment as far as the overall asset quality is concerned?
So much better show on the asset quality front, and even in terms of the absolute numbers, I think the absolute numbers have come in better than what the expectations were. So again, the expectations going forward from the management commentary would be any relapse that comes from restructured loans. That becomes one of the things to watch out for. And again, I think as the management mentioned out, the restructured pipeline, how are they perceiving that if they're looking at elevated risk coming from any stress sectors that they have lended to?
Any one parameter probably where the bank has not been able to meet your expectations?
No, more or less, I think it has satisfied on all counts. So even if you look at the provisioning figure, I think the provisioning figure is also quite decent for ICICI Bank on a quarter-on-quarter basis. So I think it's been a good show from the bank in the result.
Retail advances, Mayuresh, was another important thing. That's the case with all the private sector banks, though. 25% year-on-year growth has come in there. Is it quite satisfactory? Then expectations, going forward will be much more?
So yes, I think it depends on how the economy picks up, how the discretionary spends start coming through. But retail obviously has been a very important chunk for a lot of these private sector lenders. So I think that is one theme that they're banking on, because even the yield on retail advances is something which is quite substantial when you talk about the overall yields for the bank. So yes, I think a growth in retail advances in excess of 25-30% is going to show and reflect on the NIMs going forward as well.
Mayuresh, I just wanted to ask you about the restructured number. We have the restructured loan book. That's the total book. And if I compare it on a QOQ basis, there is an increase of 1,600 crores. Firstly, can we just compare these and, find out the restructuring? Or it's the best to wait for the management to, try and find out what's the restructured and slippages?
No, as I mentioned earlier as well, I think you need to take a line-by-line item call on the restructured pipeline of what has come through. But I think it's best to wait for clarity to happen from the management side, both in terms of how the restructured book has panned out this time around and what is their expectations going forward as well.
Right. Now, the next trigger for ICICI, of course, will be when management would start to speak. That's at about 1:45 or 2:45 p.m. today. We'll just get the timing. So that's essentially the time now that, we would be focusing in on. Would you be looking on a comment on Jayaprakash Associate? Because a lot has been spoken about ICICI Bank, the exposure over there. If that is classified into these NPA numbers, do you think it becomes an incremental positive?
So again, I think one really needs to wait for the management commentary, Pankaj. I think it's too premature to comment on this, but I think a lot gets factored into when analysts do workings on the kind of slippages expected. But again, I think the management commentary will be essential. So let's wait and watch on what they need to speak and whether they will speak about specific accounts, which I doubt they would.
Just after this 5%, 6% move that we've seen on the name, Mayuresh, on the positive side, you think it's an inline quarter? People were estimating very, very low numbers, and that's why that relief rally coming in. But broadly in line, no changes to estimates you expect?
So clearly, I think that the numbers have been decent, as I mentioned earlier. So no upgrades per se, in my opinion, at least based on these numbers. But again, I think we were optimistic on that stock even before Q1 numbers. So I think we had reduced our earnings estimate post quarter 4 numbers. But again, the management commentary specifically for FY16 is extremely strong. And in my opinion, I think we still remain optimistic on ICICI. So our target still remains the same at 370.
All right, Mayuresh, we'll leave it there. Thank you very much for joining us here on NDTV Profit and giving us a quick reaction on the numbers which ICICI Bank has come out with. We also have with us Gaurang Shah.